Meet Robert Kiyosaki, the brilliant mind behind Rich Dad, Poor Dad. Join us on a journey through his financial wisdom. In this exploration, Kiyosaki reveals his secret formula for success and the savvy moves he made during the 2008 market crash. But that's not all. He's also sharing his bold plans for dominating the potential 2023 crash. Stay tuned to learn from this financial legend. Don't forget to like, subscribe, and hit the notification bell to stay updated on our financial insights. So, without further ado, let's get into it. Surviving the 2008 crisis, strategies for success. Robert Kiyosaki's approach during the 2008 financial crisis was marked by a unique understanding of debt. While conventional wisdom often advises against taking on debt, Kiyosaki recognized that all debt is created equal. He believed that debt could be a valuable tool if used intelligently. During this period, as interest rates dropped, Kiyosaki seized the opportunity to invest in real estate, particularly apartment buildings. By taking on loans to fund these purchases, he was essentially using other people's money to build his wealth. The key here was that the income generated from the rental properties not only covered the debt servicing but also provided a substantial surplus. The power of real estate. Kiyosaki's choice of investing in real estate was not arbitrary. Real estate, especially income-producing properties like apartments, can provide a steady stream of cash flow, which proved to be a reliable source of income during the crisis. Additionally, as the real estate market recovered, the value of his properties appreciated, further contributing to his wealth. Tax-efficient investing. Another critical aspect of Kiyosaki's strategy was tax efficiency. He didn't just invest in any real estate. He chose investments that came with significant tax benefits. This included not only the depreciation and amortization of the properties, but also investments in oil wells, which provided additional tax breaks. By minimizing his tax liability legally, Kiyosaki was able to keep more of his income, enhancing his overall financial position. Risk management. It's important to note that Kiyosaki's approach wasn't without risks. Investing in real estate and taking on debt are inherently risky endeavors, especially during a financial crisis. However, Kiyosaki's success lay in his ability to manage these risks. He carefully selected properties, improved their value, and ensured that rental income was sufficient to cover expenses and debt payments. This calculated approach reduced the downside risks. Learning from Kiyosaki's strategy. Kiyosaki's experiences during the 2008 crisis offer valuable lessons for investors. They underscore the importance of financial education, particularly in understanding the nuances of different types of debt and how they can be harnessed for wealth building. Additionally, his emphasis on tax-efficient investing highlights the significance of optimizing tax strategies within the bounds of the law. In essence, Robert Kiyosaki's success during the 2008 financial crisis was rooted in a combination of astute financial knowledge, strategic thinking, and a willingness to take calculated risks. His story serves as an inspiration and an example of how unconventional approaches can yield financial stability and prosperity even in the most challenging economic times. Looking ahead to 2023. Assessing the current economic landscape. Robert Kiyosaki's current stance on economic conditions is characterized by a critical evaluation of recent policy decisions. His concerns are multidimensional, with a particular focus on specific policy choices that have the potential to influence the economy. Keystone XL Pipeline Decision. Kiyosaki's unease centers on the cancellation of the Keystone XL Pipeline, a major infrastructure project designed to transport crude oil from Canada to the United States. To comprehend the significance of this decision, it's crucial to recognize its far-reaching implications. Energy sector impact. Kiyosaki, drawing from his extensive background in the oil industry, sees the cancellation of the pipeline as a pivotal decision with significant consequences for the energy sector. He believes that it could disrupt the flow of oil and influence energy markets. Alterations in energy markets could in turn impact oil prices, profitability within the energy sector, and have ripple effects on various related industries. Economic interconnectedness. Kiyosaki's analysis goes beyond the energy sector. He acknowledges that the economy is a complex web of interconnected industries. Changes in energy policy, he contends, can set off a cascade of effects, affecting sectors such as manufacturing, transportation, and construction. The shifts in energy prices can lead to changes in production costs, transportation expenses, and overall cost structures, ultimately impacting the broader economy. And before we continue, if you're finding value in this discussion, please take a moment to give us a thumbs up and consider subscribing to our channel. Your support helps us bring more valuable insights to you. Thank you. Anticipating inflation. Another major facet of Kiyosaki's economic assessment is the anticipation of rising inflation. Inflation, in simple terms, refers to the gradual increase in the price of goods and services over time. Kiyosaki's concerns regarding inflation revolve around several contributing factors: government spending and economic stimuli. Kiyosaki foresees that a substantial infusion of funds into the economy through government spending and economic stimulus packages may contribute to inflationary pressures. When there's increased demand for goods and services coupled with a limited supply, it can result in price increases. Debt-to-GDP ratio concerns. Kiyosaki's apprehensions about inflation are intertwined with concerns about the mounting debt-to-GDP ratio. This ratio measures a nation's debt relative to its economic output. If this ratio becomes unsustainably high, it may necessitate inflationary measures to manage the debt burden. This, in turn, can lead to a devaluation of currency and higher prices for consumers. Plans for 2023: Navigating economic uncertainty. The year 2023 approaches. Kiyosaki places great emphasis on the significance of alternative investment strategies. He encourages individuals to explore unconventional avenues rather than adhering strictly to traditional investment advice, particularly in light of the current economic uncertainties. Diversifying investments. Kiyosaki's call for alternative strategies encompasses diversification. Instead of concentrating investments solely in traditional assets like stocks and bonds, he suggests considering a broader range of options. This might entail investments in tangible assets such as real estate or precious metals, as well as venturing into entrepreneurial endeavors and small businesses. Diversifying one's investment portfolio can help spread risk and potentially provide stability in volatile economic conditions. Critical thinking and informed decisions. Kiyosaki's overarching message to viewers and investors is the importance of critical thinking and informed decision-making. He encourages individuals to approach financial choices with vigilance and a discerning eye. He advises against being overly influenced by mainstream financial institutions and their guidance, emphasizing the value of conducting independent research and forming well-informed judgments. In summary, Robert Kiyosaki's outlook for 2023 involves a meticulous assessment of recent policy decisions and their potential impact on the economy. He expresses concerns about the cancellation of the Keystone XL pipeline and its ramifications for the energy sector and the broader economy. Furthermore, he anticipates rising inflation due to factors like government spending and a high debt-to-GDP ratio to navigate the economic uncertainties in 2023. Kiyosaki promotes alternative investment strategies and encourages individuals to think critically and make informed financial decisions. Kiyosaki's advice: Financial education. Kiyosaki underscores the significance of financial education. He believes that understanding the principles of money, investing, and taxation is crucial for making informed financial decisions. The more individuals know about finances, the better equipped they are to navigate economic uncertainties. Diversify your investments. One key piece of advice Kiyosaki imparts to viewers is the importance of diversifying their investment portfolios. Diversification involves spreading investments across various asset classes, reducing the risk associated with relying on a single type of investment. Independence and decision-making. Lastly, Kiyosaki encourages individuals to think independently and critically when it comes to their finances. While it's important to seek advice, he cautions against blindly following the crowd and recommends conducting thorough research before making any financial choices. Congratulations! You've been blessing with knowledge from our Rich Dad Poor Dad author, Robert Kiyosaki. Now, here's a simple question for you. If you could ask Robert Kiyosaki one financial question, what would it be? Share your thoughts in the comments below. But wait, the financial fun isn't over. Keep the wisdom flowing by giving this video a thumbs up and hitting that subscribe button. Don't forget to turn on notifications so you never miss out on more financial insights from experts like Kiyosaki. Thanks for joining us, and remember, your financial journey is full of exciting possibilities.